All right, let's get some insights on the news that's shaping the markets overall. For that, I want to welcome in Steve Orr, CEO of Quasar Markets. Thanks so much for joining us this morning. I was about to put us in the afternoon. Can you tell I'm ready for the weekend?
I love Fridays, right? Especially here.
Right, exactly. Whether it's Happy Friday, TGIF, let's bring it on. All right, let's talk kind of a big picture here for the markets. We only got one economic data point in today, causing a little softness. But the big theme this week has been about the Fed and its decision-making process and the direction the Fed is going to go. So what's your takeaway? And what are you projecting in terms of the Fed and its impact to the market?
Yeah, you know, it's interesting because Powell has been wearing a purple tie just about every single meeting. Doesn't want to upset anybody, right?
Mm-hmm.
He's very nervous about the markets once he has a big job to do. But the truth of the matter is he should be cutting rates now. We've been seeing that for quite a bit. And when he didn't do that on Wednesday, the markets kind of took it in stride a little bit. But what happened was still tech is still protecting us a little bit. They're still pushing higher. But I'm still saying it. I said it last year. I'm going to say it this year again. We're only going to see two rate cuts this year. It's going to happen September and December. And I think once they start cutting, that's the biggest question. Because when they start cutting, they're not going to stop cutting.
So you say we should be cutting now, but we know the Fed has consistently said it's looking for this 2% target. They have reiterated that message time and time again. Powell said that conference after conference, data-dependent Fed. What's the thesis behind why now?
Well, you know, it's interesting. I always believe in what they do and not what they say, because if you look at the dot plot, they're telling you by 2026 we're going to be down to about 3.5%. So they already know they're going to be cutting. It's just a matter of when. And I think they don't want to do too many cuts, especially not an intermediate cut. But no, I think we're going to start cutting probably at the end of the year, and we'll probably start there, and we'll continue throughout next year.
Why do you think two this year? Because I think when we look at the, for instance, the CME Fed Watch tool, yes, the odds are in for September, but then it gets tricky when you get around the election. What makes you think that there is the possibility for two this year?
Well, believe it or not, I'm that old, but I remember 1995 when.
I'm old enough to remember that too.
when Greenspan, he would continue to see those, and you know what happened in 95? He started to cut very quickly, and the markets took off from there. And nobody wants to see a failing market. Everybody wants to see it pushing up. Everybody wants to see happiness, and we're not seeing that right now. And you're absolutely right, Diane, that the markets are also being held hostage by the election. We don't have a clue. Trump has not picked a VP yet. There's a lot of things that are unknowns right now. And markets don't like that. They don't like unknowns, right? They really like knowing what's going on. And we're not seeing that. We're seeing an uneasy Fed. We're seeing an uneasy buyers. We see GME and AMC all the time. There's no real consistency in the market right now, except for options. Options are hot right now.
And okay, there is one consistency. You actually kind of alluded to this earlier, and we see that in terms of the standout being the tech sector. NVIDIA. So what's your thoughts on, especially when you see all this kind of concentration in that area?
Yeah, I don't want to sound like a broken record like everybody else, but I love NVIDIA. I've been saying that for a long time. I love AI. I think what's coming is very quick, especially here in the fintech space. They have chipsets for Blackwell and Grace Hopper and Grace Blackwell are really moving the markets here. You can double the chipsets up. They've got great integration with Taiwan Semi. I mean, these problems that we are seeing in the markets are going to be alluded to by the AI. It's really pushing us up, and we're only in the first inning of AI. Wait till we talk to the machines and on a level that's asking questions about what stock should I be buying, and the machine tells us, right? That's coming, and I think that we're just like the internet at the beginning. This is literally the first inning, and NVIDIA is positioned to go even higher. Look, I think we go to $200 a share after the 10-for-1 stock split. We go higher.
Yeah, and when our AI avatars take the place of us and are here instead of us being physically present. All right, let's talk about a pick that you have that's kind of different. I was surprised by this. You are looking at National Grid. What's behind this? What's your thinking?
Absolutely. National Grid, NGG, is very simple. It is a huge company in the UK, and two things they're doing. They're putting $77 billion into the Northeast here in New York and Massachusetts for renewable energy. I mean, we have nat gas, we've got LNG, liquefied natural gas, but they have renewable gas. This is really cool. Plant waste, things of that nature, they're going to start putting that into the systems here and actually spending $77 billion. And Oppenheimer gave them a raise to a buy because they paid off their debts. They've actually raised the money. They're good to go, and they're now sitting there pretty tightly now. And they've had a nice dip. So I like buying dips. I like buying things when they're cheap, and I think NGG, that's where I'm buying it here.
Who doesn't like buying a dip? But okay, final thoughts on the state of the market or the road ahead, what you're looking towards next week or the balance of the month.
So I still think the answer still is tech, as I said last time. We're still going to push higher. The Dow is going to still probably mumble on a little bit for the next few weeks. Why? Because we're all in the Hamptons and we're all hanging out in Florida and Friday, right? So yeah, of course. But I think once we start seeing the election getting a little tighter and starting to see things a little clearer, I think you'll see I guess the retail investor will start to make moves before the institutional investors will.
All right, interesting stuff. Fun Friday chat there, Steve Orr, with analysis on both Fed, markets, and more. Stephen Orr, Quasar Markets. Thanks so much for joining us.